And we should be live. Welcome to Thoughtful Money. I'm Thoughtful Money founder and your host, Adam Taggart, welcoming you here for another Wednesday morning live stream session with the precious metals guru himself, Andy Schectman of Miles Franklin. Hey, Andy, how you doing?
Good to see you, Adam. Thank you. I'm well. Hope you had a great Thanksgiving.
Thank you. I had a wonderful Thanksgiving, and I hope you did too. I hope everybody else watching did as well. What did you guys do, Andy?
I had the family down to Florida, which was very nice, and just relaxed. Had my in-laws staying at my house. It was great. It was if you're watching. Hey, real quick, by the way, as you know, I've talked to you about this. This has bothered me for the last few weeks. I pride myself at my fact checking, and I wanted to send an apology to everyone out there. I made a mistake in quoting Section 9 of the Genius Act. What it really was Section 9 of the Strategic Bitcoin Act, which is still under committee, where they talk about 2026 revaluing the price of gold. I was wrong in that statement. I sent out emails to as many people as I could who caught that. I fact check as much as I possibly can, and when I make a mistake, I own up to it, and I did make a mistake on that. So my apologies to everyone out there. I spend copious amounts of time trying to research and read and then fact check and make sure. And that one, I just, in my mind, mixed it up between the two bills. So my apologies to everyone out there.
Well, Andy, look, as I said, and we talked privately on this, this just shows what a man of high integrity you are. You and I spend, I don't know how many hours a week in front of the camera talking, and invariably we're going to misspeak at times. And as I said to you, for me, it's not so much the mistake that happens, it's what the person does in response to the mistake. And you just went all out in terms of trying to correct it, trying to find anybody and everybody who listened to the podcast.
I lost sleep over it. I really did. It bothered me because I pride myself in making sure what I talk about is validated. So that was my bad. So everyone out there, thank you for your understanding, and I apologize.
All right. Well, your point, to be honest, wasn't wrong. It was
wrong bill.
It was just which bill you were referring to. But the actual point of the revaluation of gold is sort of something that's under consideration by the current administration, is still very much very valid.
Correct. Thank you.
All right. Well, look, let's dive right into things. And I'm feeling particularly frisky today, Andy, because I'm making progress again in the gym. And I'll tell you about that afterwards, unless folks are interested in the Q&A, and I can be a little more specific there. But more importantly, let's talk about this.
Yes.
Silver has been having, it's been on a tear. It has been through several price breakouts of late. As folks may remember, back in June, I gave myself silver eyes on my my ex profile photo because silver had broken through 35. And as we had been talking about for a long time, Andy, there wasn't a lot of technical resistance between 35 and 50. And lo and behold, silver ran up to 50 pretty quickly. It topped out around 54. It then went through some corrections, but fought its way back up and then punched through 54. You know, last night, Andy, silver futures were up at 59 and change. I don't know
that's where they are right now. Let me look at the futures. I'm fairly certain that's where they are.
Okay, I know about an hour ago it was just below 59 again, but I'd love it if they were back up.
They were when I looked a minute ago. Let's see. Come on, open up.
All right.
Right now, the silver futures are up 41 cents to 59.11.
All right, so 59.11. So we are knocking on the door of $60 an ounce silver, which, Andy, if at the beginning of this year I had told folks that I thought silver was going to get to 60, they would have said, "Hey, Adam, give me something, share whatever you're smoking with me." Yeah. And I get the sense, Andy, that you're not shocked. I know that you knew the potential for this. I'm going to guess you're still pleasantly surprised with how this year has unfolded. So anyways, my question for you is, how high can silver go here, do you think? One of the questions I just asked in a poll on X was, when is Wall Street loves big round numbers, and they kind of act like a tractor beam once Wall Street kind of realizes, oh, this number might be possible. You get not much further above 60, and I think Wall Street starts thinking, $100 an ounce silver, may not be an impossibility. And then that tractor beam may start to pull in here. So anyways, as you're looking, as we're heading into 2026, is this fun ride going to end as we enter into the new year? Or do you think this momentum could take silver much higher?
Well, before I answer the question from a technical standpoint, I'll tell you, look, I try and see what the big money is doing.
Mm-hmm.
And the big money in this country would be whoever the hell is standing for possession of over 13,000 tons of silver so far this year. These are people that don't do this just for the hell of it. These are people who have billions and billions of dollars who are standing for delivery at COMEX. That's more than the output, that 13 billion tons, the combined output of Mexico, China, and Peru, the three largest producers of silver in the world. That's more than the combined output of those three. And I think the biggest money on the planet here in the United States, forget about Russia, forget about China, forget about India, forget about Saudi Arabia, who have all been buying the hell out of it. And I've talked about that forever. Whoever's doing it here in the United States, and I think it's just really strange, or I think it's an indictment against the entire journalistic integrity of all of the journalists in this country combined, that no one talks about it. And we've seen so much metal coming into the country by the most sophisticated and well-informed traders in the world who do not do this just for the hell of it. Where is the reporting? Now, before I answer your question again, let's talk about how much has come in so far just in the first 3 days of the December contract that went off the board on Friday. Now, before I say that, it's interesting, isn't it, that Friday was when the December contract went off the board and those that stand for delivery do so. It's also interesting on Thursday night, Thanksgiving, and when there's not a lot of volume going on Thursday night, the New York traders are still, sleeping off their turkey high, whatever that thing in turkey that makes you fall asleep. Nobody was trading anything, and yet the server farm in Illinois overheated just for the CME groups, which is the COMEX, just for their metals set of servers. Forget about the 2 and 3 times redundancy that these server farms have with air conditioning units. So it overheated, was what we were told. But
Mm-hmm.
these server farms are built with double and triple and quadruple redundancy for cooling.
Right.
That one overheated.
And this was right as silver futures were really making a run up to like 57, right?
Correct. And in Asia, and bang, they shut it down. Now, there's all sorts of rumors about huge delivery requests, demands, huge, but they shut down for about 12 hours. And this is as you got massive short positions. You got the squeeze happening in London, where there's 2 billion ounces of contracts that's, backed by only 145 million ounce free float. What could possibly go wrong there? All of that stuff is happening, and yet we're supposed to believe that the CME group, none of their other servers overheated, like forex or interest rates or equities. Just the metals servers overheated for 12 hours. So keep that in mind.
So there was a congressman like 6 months ago or so that didn't want a vote to happen in the House, and so he pulled the fire alarm.
Yeah, that's exactly what it is.
To you, does this smell just like that? Yeah,
100%, 100%. And we're and if nothing else, it goes to show how fragile our markets are. Where, a couple of servers overheating can take down our markets for 12 hours.
Mm-hmm.
The global price setting center for the world on metals, it overheated a server, and that takes it down. It just goes to show that, they'll protect their own the best that they can. But so far, in the first 3 days of the December contract, we've seen almost 45 million ounces of silver delivered. Multiply that times $60 or thereabouts, and what are you at? Like $2.5 billion or something, just in the first 3 days, and it will get bigger than that alone. We've also seen almost 2.5 million ounces of gold delivered just in the first 3 days. But this is everything. Every single month we are seeing this, every single month. And so you're talking about the most well-informed and well-funded traders on the planet. Now, how high can it go, right? Okay, technical analysis would say the following. When you have a cup and handle like this, a 45-year cup and handle, the longer the duration, the higher the potential, the more condensed all of that energy is. And so anyways, you take the top of the cup, which would have been 1980 at $50, the bottom of the cup in the early 90s about $4, and then you add it to the top of the cup or the top of the handle when it breaks through. The difference, 50 to 4 is 46. So you would add it to the 50. 96 was what technical analysis would say would be your next target, but there is no resistance up there. It's never been that high. But if you employ that logic, yeah, triple digit silver is not something that's crazy. And let's look at it another way from a conservative standpoint. Right now we have gold at 42.20, call it, okay? You take 42.20 and you divide it by the 100-year average of gold and silver, man's ratio, right? About 42 to 1. Well, that's $100 right there, isn't it? 42.20 divided by 42. It's going to be $100. It's coming out of the ground at 7 to 1.
Yeah.
So if you took 42.20 divided by 7, if you woke up tomorrow and silver was $600, yeah, that sounds crazy, but that is the geologic ratio right now. Every ounce of gold that comes out of the ground, the equivalent in silver right now is 7 to 1. It used to be 16 to 1. But because it's found like your skin is epidermis in the form called epithermal right near the surface, it's depleting. The big deposits were found forever ago. And so, you're talking a billion plus ounce shortfall between supply and demand in the last 5 years. This will be the 6th year. I think it's the 6th, where we're seeing the same exact thing. Demand is outpacing supply. Supply is diminishing. The geologic ratio is diminishing. The massive deliveries on COMEX and LBMA. And think of it this way. It's a whole hell of a lot easier for you to send me a wire for $50 million and take possession of that or have it delivered into a vault than it is to start taking this kind of volume off of COMEX. Whoever is doing it is the most sophisticated and well-funded traders in the world. And at that level, you're well-informed too. So I would say to you that it's as much the technical side as it is who is investing billions upon billions every month for the last 12 months since he won the election. Who is it and where's it going? This is the kind of volume that is so unusual that the fact that no one's asking about it but guys like me is just insane.
So we've talked a bit about these unprecedentedly high volumes of deliveries, and you have suspected that there are sovereign entities behind this, and I think you just intimated there again. I've also asked you, because this had plagued my mind for years, which is for something that is becoming potentially this scarce and is this important,
Yeah.
The above ground market isn't that large. So why doesn't a large corporation that depends on silver, like an Apple that just has billions and billions of dollars, just say, hey, let's take, some fraction of our cash reserves and just lock up a whole ton of silver? Or why doesn't a billionaire or two do this? I see people say, well, everyone's afraid of what happened to the Hunt brothers, but honestly, that's kind of ancient history. I saw a headline. I don't know if there's any truth to this, so I'm curious if you know anything about it, but that Tudor Jones purportedly just took a really huge amount of silver for delivery. Is that true, or is this just kind of the crazy rumors that start swirling when you start having real price tightness like this?
It's funny you say that. I saw that last night too. Fact checked it. Couldn't find any credible evidence saying it. But maybe it is true. I mean, and to your point, again, see, I do try to fact check everything, and I saw that, and everywhere I looked, I couldn't find validation of it. But wouldn't surprise me. But to your point, when I say who the hell's taking possession of all this, maybe it is Apple securing, and Samsung, and Sony, and maybe they're going directly to the miners like Tether is doing, disintermediating the marketplace. But I would think that any of these any of these large industrial manufacturers that need silver for whatever it is, if they haven't secured it by now, they're out of their flipping mind. And
Right.
here's where it gets crazy: is there will be a battle, and I think we're right on the heels of that battle between said industrials and the hedge funds, who say, I smell blood in the water. And
Right.
silver is what's called a Giffen good. And a Giffen good means as the price goes higher, the demand goes higher, because in other words, these people, like you just mentioned, say, man, if we don't secure this, we're dead in the water. So go, 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 get it, get it, get it. Because if you don't, you can't make your product. So everyone secures it, the price goes higher, and that we better get it too. And so as the price goes higher, a Giffen good means that the demand accentuates tremendously. And it's usually not that way. It's the opposite. When price goes way up and other stuff, demand falls off, not with silver. And in this case, silver being an industrial metal that was just classified a critical mineral by the US government. It was done so by the European Union in 23. And China's response is, well, we're going to massively limit exports. Now, they're the second largest producer in the world and a big exporter. Anything that is exported out of China now must be permitted through Beijing. What's it for? They're going to massively curtail exports. It's a race for the real thing, which would make these industrials say, we're running out of time and we need to make this stuff and we need silver, get it. And I think you could see that start to snowball very, very quickly.
So in that case, which, I mean, again, that logic has made sense to me for years and years, but certainly does now as it seems like, stuff's really beginning to get real. So, on the physical side, I could see a company taking a lot of delivery or just buying a bunch of futures contracts to kind of, hedge against a future increase in the price of silver. But with futures markets, you get counterparty risk, right? You might say, hey, look, at some point in time, if this stuff really starts getting scarce, they might just settle my futures contract in cash. And that's not what I want. I need the actual silver ounces. If you buy a whole bunch of silver, if you're a commercial player, well, you're going to use that silver over time. And then what do you do once it's out, right? So to me, it makes a lot of sense if you're one of those big players to buy the mine, right? To just lock up future supply for a long period of for the longest period of time you can. Do you expect before this silver run is played out that the silver miners, maybe like a First Majestic, and I should mention I own shares in First Majestic, so I'm just being transparent, that those companies could just turn white hot in terms of bidding wars?
I remember talking to Keith Neumeyer, who I consider a friend, and I remember having dinner with him and talking a year or two ago about this. And he said he had just come back from a conference. This probably would have been a year and a half ago, and for the first time in his career, there were industrial business owners or representatives of said industrial companies that were coming to the conferences he was speaking at, specifically to talk with him, to disintermediate the marketplace. And like I said, Tether, to your point, yes, because Tether, we've talked about the stablecoin bill, and the stablecoins will be backed by treasuries. The treasury interest is not transferable. Tether keeps it. What are they buying? Gold. And they're going directly they were at the Beaver Creek Mining Summit. They're going right to the miners and saying, we want to get gold right from you, right from the source.
Yeah.
So the answer is yes.
And they don't even need it commercially the way that like a Samsung.
Correct. But but this is the battle between investors and industrials, and it will heat up because one needs it. And the thing about the industrials, or the producers rather, who need it for making their product, is that silver is what's called inelastic. In this phone, there might be, I don't know, just a few bucks worth of silver, but how many phones do they make? And if the price of silver triples, what will that do to this? Well, okay, it makes it go up 20 bucks. Who cares? They pass it on to you. Right. These phones have gone up a lot. If you remember what the first ones were, now they're $1,500 for a brand new one or whatever. So the price is going up. But if you need a 20th of an ounce, I don't know how much is in an iPhone, but if that's what you need to to make an iPhone, you don't care what the price of silver is. What you do care is getting it so that you can make the iPhone.
Right.
And that's the same thing in any for the most part, in any product. The amount of silver is tiny, but it's massively needed. But because of its tiny use per unit, it's what's called inelastic. It's not a very big price component, but it is a necessity. So yeah, they will have to do that, and I think you'll probably end up seeing that because, look, since October, we've seen pretty darn close to 90 million ounces leave the COMEX market, and so there's been a lot more bought that stays inside of COMEX, but a lot of it is leaving, and maybe some of that metal would be Samsung or Tesla or Sony or whatever, and just taking possession of it, taking it out of the market. But a lot of it could be left in the COMEX market because these big institutional manufacturers, they don't look at the system as being rigged yet, and they have no problem leaving 50 million ounces of silver inside of a COMEX vault. So inside, like for example, just so people understand COMEX, we have 9 Brinks facilities. One of them is a COMEX facility. It's Brinks JFK. And I have people that have in our storage program huge amounts of metal in Brinks JFK, even in the form of 1,000-ounce bars. That's in the eligible account.
Mm-hmm.
Eligible means yes, they're eligible to be sold if they're moved to the registered account. So, they're not for sale right now, and it's in a COMEX facility. So if Sony had an account in a COMEX facility, they could take possession of 50 million ounces of silver and leave it there, because they don't see any need to store it somewhere else. And as they need it, they would have it delivered. So a lot to think about, not just the metal being purchased and leaving the facilities, but some of them would leave it there thinking there's no reason to worry about it, right? So anyways, yeah, I think that is something that we can expect to see more and more of as the price goes higher. The necessity to secure future production of your product would say we need to get it, and we need to get it now, and I think you'll see that happen.
Okay, I've got some other questions I want to get to, but
Sure.
While we're still talking about inventory, I have seen headlines again of scarcity of inventory in China too. So you and I have largely been talking in past discussions about COMEX basically draining money from the LBMA, right? And then people taking delivery from COMEX, but the weak point there being the London node. Is there actual weakness or not weakness, but tightness that we're seeing in China as well in the Shanghai exchange?
Yeah, I don't know the exact number, but I would argue it's pretty darn close to the lowest number they've had maybe ever, or in a very, very long time. And, people are taking possession of silver out of Shanghai as well. Their public is. And so they're incentivizing it. Yeah. And, the piggy banks are running dry everywhere. And it's not just London. It's not just COMEX. It's the Shanghai market as well. And that's something I would expect to see continue across the board. The LBMA has its lowest level maybe in the history of the recorded records or record keeping of the LBMA, 140-year-old exchange. And the same thing is happening now in the Shanghai exchange as well. Yeah, their levels have been bleeding down every single month.
Okay, so this tightness is not just in 1 or 2 nodes. It seems to be in all the nodes.
And not only that, at the same time, China says we're going to limit exports, and the U.S. says it's now a critical mineral. And so it's progressing. It's progressing, and with that, the price is going higher. And with that, you shut down the COMEX because of a server overheating. Because now the rumor was, and I don't even know how the hell this rumor gets any validation. I don't know. The rumor on X is that 400 million ounces were requesting delivery. Now, there's not even. That's way more than there's on in the registered category. Not sure where that rumor is coming from. One big Asian trader said, I want 400 million ounces. All I can tell you is this, that these rumors, a lot of them lack substantiation, and a lot of them may be just that, a rumor. But I think where there's smoke, there's fire. And the way that I would break it down is that at that level, you're seeing shortages and strain in the system, and rehypothecation in London will be the death of them. And, it's true. Big money is I think for the first time understanding that physical possession is the way to go, getting it off of the exchanges, taking possession, buying it, and standing for delivery. This is what's different about this market. Nobody stood for delivery my whole career, and now
Right.
you're seeing it every single month. And I guess the exclamation point to me is that the amount of metal coming into COMEX every single month, it's different when I say the central banks around the world. People kind of lacks it lacks the oomph because it's not happening here. When I tell you it's 4 feet of snow in Death Valley in July, what's happening on COMEX right now, we've never seen these kind of deliveries, and the lack of any questioning it, by any of the mainstream, it's crazy to me, unless it's all by design, because it's very, very, very unusual, and it should be front and center news. Because
Mhm.
what does it really mean when you're seeing this kind of volume of gold and silver, the antithesis to the dollar? What does it really mean when the biggest money in the United States is doing that and no one's asking who it is?
Right.
So
So
to me it means a lot.
so it could be kind of ignorance, right? I mean, the gold used to be tracked much more by the mainstream than it is these days, and of course, it's not backing the currency the way that it was before you and I were born. Um, but I guess I can understand it why they would want to keep a lid on it, because Andy, you mentioned rehypothecation, and just for folks that don't know what that means, that basically means you have pledged the same asset to multiple parties. So as long as they all don't ask for it at the same time, you can kind of get away with it. But once they start realizing that, hey, there's only one thing and there's multiple of us, things get crazy. So what the danger here is, it becomes like a game of musical chairs, right? Where there's fewer chairs than people. And Andy, I don't know what it is on silver. I know I've heard in the past that the paper gold market was about 100 times more than the physical market. And that's an old number. I mean, I remember that from like 10 years ago, so it could be quite different. What has it been for silver, ballpark?
In London, it's believed to be between 400 and 500 to 1. Number of contracts issued versus bars available. And you can look at right now, there's 45 million ounce free float. Say there's 700 million ounces in the LBMA, in the London market, of which over 500 of it, 550 belong to the ETFs, largely SLV. So that leaves about 140, 150 million ounces that is supposedly called the float, which is debatable as well, based upon what's happened recently. But if we take it at face value, there's 2 billion ounces in contracts out there that could stand for delivery against 140 to 150 million ounces there. Doesn't add up at all. And so the rumor has been between 300 and 400 paper contracts for every 1 ounce, but who really knows? A lot. A lot.
So an awful lot. So this is like It's a Wonderful Life on steroids, right? Where everybody comes to the bank and demands their deposits back, and of
Yes.
course it's a fractional lending environment, and so the bank just only has a fraction of the deposits on hand, and then basically you have the run of the bank and it breaks the bank, right?
Yeah, and in Shanghai, it's the opposite. So if you want to buy a bar and do something in Shanghai, first of all, it's largely cash and carry. Here's your money, here's your bar.
Mhm.
But first, in order to trade on the Shanghai Exchange, you have to buy a bar from one of the handful of pre-approved deposit or refineries. Then they laser inscribe the certificate number that you will possess on the bar,
On the bar.
1 to 1. And so that's the thing. So much of what I see, Adam, in this world right now centers around lack of trust. Whether you're talking our institutions, the judicial system, the Federal Reserve, our politicians, our banks, our treasury market, our dollar, fiscal irresponsibility, everything. No one trusts anyone. What's going on in the repo market right now? The banks don't trust each other, or they don't trust the collateral. It's trust, and I think what what these markets are doing here in the West is losing trust based upon those kind of perceptions of rehypothecation, of servers going out, of all of these things. It lacks trust, and there will come a point, I think, where trust is broken and not repairable. You have institutions like the Shanghai Metals Exchange who's waiting for the opportunity to be the price setting mechanism of the
Mhm.
world. And they have done it in a way that inspires legitimacy. Granted, yeah, it's in China. Who trusts China? Well, who trusts us? And if you have a market where the bar is laser inscribed with your certificate, well, that's a good start.
Right.
And I think that's kind of where we're going, and away from the futures exchange into a cash and carry exchange. And that's the way most of them are set up in Dubai and in St. Petersburg and in Moscow and in Singapore. They're cash and carry markets, less futures markets.
Okay. And so this is where I'm going to be heading in just a minute. In that type of world, right? Possession isn't even 9/10 of the law; it's 10/10 of the law, right?
Yep.
Who has the metal matters, right? And so, as an individual, for everybody watching here, owning your own metals versus potentially owning a paper contract, may make all the difference, right? And I'm not trying to sell fear here, but I'm just saying, especially if you get to that breaking point where trust all of a sudden hits that tipping point where there is trust in the system to where there isn't, things are going to get nutty. And you want to make sure that you've got confident access to what you own, right? Okay, so I'm gonna go on a little path in here in just a second. First off, I just want to bring this up. Colin here, not there. Vander Clippers says here, in an iPhone, there's around 1/60th an ounce of silver. I don't know if that's true or not. I'll take him on face value here. But how many millions of iPhones does Apple produce each year? Well, divide that by 60, and that's how many ounces of silver you need, right?
Yeah, and then add in Samsung and everything. Anything that conducts electricity or has a motherboard primarily has silver in it.
Right, and presumably what Tesla, in addition to all of its cars, is going to be building 1 million robots pretty soon. Pretty sure there's going to be a fair amount of silver in those robots.
Correct. Absolutely. And that's why there'll be a battle at some point between and that's the thing. Price has been suppressed for so long, and then you get it. So look at it this way. I kind of look at the why more than the what, right? The what is, yes, silver's been suppressed, but why? Why do eight Western banks have maintained the largest concentrated short position in the history of 1,000+ commodities traded, the largest ever on the exchange? Why? Why would they have this massive short position in silver? Because it's worth more than the dollar value or the dollars used to purchase it would imply. And for many reasons, whether it's a military industrial complex or not, the point is I'm getting at is that they've exerted an awful lot of effort to keep the price of silver, the lid upon it. And I've said for years, the last several years, the countries around the world have become sophisticated and coordinated and wealthy and motivated. And they understand that the key to this, the glitch in the system, is the delivery mechanism. It's kind of like the first Star Wars, where there was that one little hole in the Death Star.
Yeah.
No one thought about it. Well, no one thought that the delivery mechanism would be the death of the system. If you don't allow delivery, you don't have a futures market. So they did it, and it never was exploited until now. And the ability to naked short something when you can stand for delivery and the entities taking the other side are as wealthy and sophisticated as you are, you got a problem. These countries weren't when these exchanges were founded, and through all the way up till recently, these countries had no desire to challenge the West at all. And this is how you beat them, using their own markets and their own rules against them. And you see one of these banks fail to deliver, well, that will have a reverberation through the entire ecosystem, because these banks have their fingers in every pie, not just the metals pie. And it's a scary thing. You could also see one of the banks that have been shorting it forever break ranks and say, look, we can't do this anymore. We're out. Cover their own interests, and then the whole thing starts to spiral. And we're right there. I mean, I do believe we are right there, because these short positions that these banks have, they're losing hundreds of millions of dollars or billions of dollars in the case of Bank of America, according to Ed Steer, every dollar that the price goes up. So yeah, it's a high stakes game, and they have some real challengers right now.
So to your point there, let's say one of those big 8 banks breaks ranks and covers their shorts. They have to step into the market and do a ton of buying to cover those shorts, right?
Correct, which then pushes up the price and everyone else starts to cover or gets margin called. Right. That's exactly how it would happen. That's kind of what happened with the London gold pool, that break ranks and then everyone fends for themselves. There was a coordinated effort by all of the Western institutions to do this for a very long time. You listen to a guy like Tom Luongo, and it gets very interesting when you hear his take that, you know, the rumor that Trump is out to get the European aristocrats. And in fact, there was a really interesting article that just came out the other day, and I think it was on Zero Hedge, basically saying that that is the case. That's why when President Trump announced the Epstein files would be released, he specifically targeted J.P. Morgan in his
Tweet.
speech on this, on his tweet or whatever, saying, yeah, they're involved. Well, the article went on to say that what he's doing is akin to what Kennedy tried to do. By issuing the stablecoin bill, you're taking money creation away from the Federal Reserve and giving it back to the Treasury. Very
Right.
scary. And at the same time, JP Morgan represents the old aristocrat money. And that's why he's going. Now, that's kind of fits what Tom Luongo was saying. He's saying that Trump believes that these entities were involved in any potential election interference in the previous election and or the color revolution, all aimed at Trump. And that's why he said, no, it's about tariffs, bring all the metal back, when it never was about tariffs, to drain the LBMA, to put stress or worse on the Bank of England and all the European banks that are now wickedly short in London. Whereas all the metal that came back, maybe a lot of it was used to cover the actual short positions of the United States banks that are short. When they short in the US, they go long in London, right? That's how they do it, and to offset their balance sheet. So Trump's, threatening tariffs, they're still on the same side, going back and forth. Yeah, we need that metal back to cover these positions, but don't worry, it'll flow back. It's not flowing back. Some did, but it's not. The point of it is that this is deeper than I think we all know, but there are some people like Luongo who has a very interesting take on this, that this is about United States versus the old money, and Trump is trying to undermine them. And when you see him issue the stablecoin bill, which in essence allows the Treasury through the stablecoin issuance to take control of the money, that doesn't make the old money very happy. So could it be? Maybe. I'm just saying, you got to kind of think of it all. And it does make sense on some levels, not to go down that rabbit hole, but interesting thought experiment.
Okay, but basically, there's a lot swirling here in this soup, and almost all the
Yes.
things we're talking about are things that would likely result in a higher silver price.
100%.
So I'm going to talk about people getting their hands on silver in just a second. Andy, I've been seeing, both from the dealers that I talk to, but also I've been seeing in the news, that on the retail side, the person who's walking into the coin dealer, we're seeing at this point in time still a lot more sellers than buyers. Are you seeing the same? And
No.
you're not. Okay, so you're seeing more buyers now?
Yeah. I think maybe there's some selling, but not really that much at all. Some, more than I would have typically expected, but 1 out of 20 maybe are selling, if that.
Wow.
I
Okay.
think there's a lot more people buying than selling.
And do you think that's true industry wide, or because what I'm hearing, which again, you're much closer to the pulse of this than I am, is that it's a lot of people who are generally fairly cash strapped. They don't necessarily want to be sellers, but times are tight, right? And what I've been hearing is hey, you're seeing people who are saying, oh, I can get some money, let me liquidate what I have. And that's a sign that the mania isn't over yet, because usually what happens is you get to shake those people out, and then the buyers come in and drive the price rise to its zenith. So some of these articles are saying, hey, this isn't the end of the silver's rise yet, because we still have a lot of sellers here in the system. Do you just have a more educated audience, or
Yes.
is what you're seeing?
I'm glad you said that, because I do think that's the case.
Okay.
I would think people listening to you aren't selling. The people that might be selling, look, in 2021 during the silver squeeze, you had a gazillion people buying for the wrong reasons. And, January, February, March 2021, we were doing 700, 800, 900 orders a day, most of them very small. those people are gone, and they got pissed off in a
Yeah.
big way because the price collapsed, right?
Right.
And went from $31. It finally broke 30, and then you get what was his name? The knucklehead. Oh, I forget his name, but said we had to tamp down the price of silver. Openly admitted that they had to tamp it down. I think it was at the time the guy that was running the CFTC. Anyways, and then the price collapsed and didn't come back for a few years. Those people bought it for the wrong reason, and they bought it to profit. That's not why you buy gold and silver. Yeah, you may profit very handsomely, but that's not why you buy it. You buy it to get out of the way of what's coming. You buy it to get out of the way of this change that's happening right in front of us. Those people might have sold because they're finally like, I'm so happy to be done with this stuff. But the people who are educated and understand, the people who listen to you, they're not selling. In fact, they're buying because they understand that this is just the very beginning. So yeah, I'm sure there has been some selling, but not something that I think even remotely would identify this market right now. I think it's the opposite of that myself, at least through our client base.
Okay. Yeah. And I'm seeing some folks chime in here. This guy says local dealer in Chattanooga told me it's 60-40 sellers to buyers. This guy here saying there was a line of silver sellers at the local coin shop and the price cost 50. So anecdotal data, but
because those people that are going to the local coin shop are not coming there with $500,000 in silver.
No, they're not. No, they're coming with a few ounces or
right.
Some family silverware. That
right.
type of thing. It's
and
not
I understand that.
Investor.
I get it. People are saying, "Oh my God, it's never." Like, I'll give you an example. I mean, the market is very finicky in the respect that when the price went up for 9 straight weeks in a row, no one called, and then and bitched. No one said anything, and then the price fell below 50, and everything you saw it's never coming back. It's done. It's over. Sell it all. And people start freaking out. My biggest clients, a couple of them would say, "What's going on with silver?" And I would just chuckle, and I would say, "But where were you for the last 9 weeks?"
Yeah.
But now it's gone right back up again. And so, again, in general, I think that those are the people who see it at all-time highs and look at it as an opportunity to get some cash, and they probably are cash strapped. The people who are buying it for the right reasons, they say there's no bull market like a metals bull market for one reason. And if you understand this, you're not selling. And that is that the higher the price goes, it reinforces your concern for the reasons you bought it to begin with. People who understand that are not selling at all. And when I look at my gold and silver, I don't look at it as something that, I guess it's there for an opportunity too, but I don't look at it as something to cash in on when the price goes up. To me, it's wealth that I hope I never need to use. Right. And most of the people I talk to would say the same thing. You hope you never need to use it. If you do, you're darn glad you have it, not just for an emergency, for an opportunity. But if not, you give it to your kids. And there are very few things you can give to your children that have sentimental and intrinsic value the way that gold and silver does. And I will say this, long after the dollar bills in our wallet are hanging from a frame in the Smithsonian as an example of what used to be, gold and silver will still have value as they have for 5,000 years. And I think you're beginning to see that in the smartest money in the world, the central banks, the commercial banks, and the institutional traders here that are bringing it back. So yeah, there is some of that, let's say, to be fair, but we're not experiencing a lot of it.
Okay. Totally tangential for a second. Samurai here reposted the stream. I think I mentioned this last time. I saw people started to repost. I actually don't know how you do that, folks, or else I'd tell folks how to do it. But if you can figure out how to repost the stream, folks, please do, because we got over 5,000 people watching live right now, Andy. A lot of people are watching this, but the more people who repost, the more people will get into the discussion here. All right, so here's where I'm going with all this. So unlike gold, where if I had, this is a 100-ounce bar, right? If I had 100 ounces of gold here, it's a lot of money, but I can carry this in one hand, right?
Right.
I can store it somewhere safe pretty easily. With the type of client that you have, Andy, and I think types of clients, I think a lot of the average viewers here are, they're gonna buy more than 100 ounces worth of silver. And as we talk about this era in which counterparty risk potentially becomes a much bigger factor as trust, potentially gets broken here. Like I said, you want to have confidence that your physical ounces that you're accumulating for your family's future, maybe your progeny's future, that it's somewhere you've got confidence, that it's safe and that you can get dependable access to it. Now the problem is again, if this is gold, I can store this, somewhere pretty easy. If I've got multiple 100 ounces of silver or thousands of ounces of silver, it's really bulky. It's not something that's easy to store at home. And, at some point you have enough where it becomes a theft risk, a loss risk. And it's also just hard to port. I made the move from California to Nevada, and I had some bullion stored locally. And just to be super clear, folks, not in my house. And I had to port that myself from one state to the other. And the gold was no problem. The silver, a problem. I mean, it's really inconvenient, bulky. You're freaked out while you're trying to transport it. There's just a lot of issues there. So, if you're going to invest in silver at any degree of scale, you want to have a safe place to store it. So this is where I'm going. I think last time you were on, Andy, we said we would talk a bit about how people can buy precious metals through an RIA. We talked about some of the dangers and some of the scams that are out there, but I do want to spend some time talking about the right way to do it. And also, we mentioned a few times in the past that at Miles Franklin, yes, people can buy precious metals from you, but you also offer secure storage. So you're a way for somebody who says, look, I want to own multiple hundreds or thousands of ounces of silver, but I don't want to store it, in my bedroom because it'd be crazy. You give them a dependable place to be able to store it. They're in Brink's vaults. They can get delivery on demand should they want to. So can you talk about both of those things, both investing in precious metals and IRA and then your storage solution?
Yeah, later today, I would implore people. I don't know when it's going to come out. It'll probably come out in a couple of days. I'm interviewing a man named Dale Whitaker. And I'm doing it with trepidation, shall we say, because that's not even the right word. I have talked a lot about on shows the scams that have gone on in the silver industry. I have never mentioned the names of the companies who do it. That's just the way that I do things. And by listening, you could probably figure out who they are. And I would argue that the custodians, there is a one or two particular custodians, I would argue that they're just as culpable for all of this, turning a blind eye. Well, Dale Whitaker was the CFO, I don't want to say the wrong company. I think it was Augusta. I'm not positive. I think it was Augusta. One of the companies out there that have had questions, and he became a whistleblower. And he's gone on a bunch of shows, including some of the shows that I've been on, and like Kyle Seraphan, who's an FBI whistleblower, former FBI whistleblower, who had me on his show, amongst others. And Dale will talk. I would strongly suggest people check out this video when it comes out in the next day or two about the scams that the IRA industry is known for. And he'll mention names, I'm assuming. I won't, but he will. And they're real and they're legit, and they're typically always centered around very high price spokespeople. When you buy an IRA, in my mind, the only thing you want in it is vanilla ice cream, meaning bullion coins, not special coins, not anything. You want American Eagles, you want Canadian Maple Leafs. Yeah, you want a bar like you just had. You want bullion, period. And you have it held at one of the depositories that offer segregated storage. For example, I've had lunch with the owner of Delaware Depository. Awesome guy. COMEX Depository. Not a bad thing to say about Delaware Depository. However, when it comes to silver in an IRA, they don't segregate it. They allocate it. Problem. And I told him that when I had lunch with him. Why don't you store more with us through your IRA program, Andy? Because you don't segregate the silver. Yeah, you're right. If you did, I would, but they don't. They segregate gold. They allocate silver. What does that mean? Well, I'll tell you exactly what that means. I sold a client those exact same 100-ounce bars that you had, lots of them in an IRA. I used to be paid to fly around the country with American Church Trust that became Gold Star. And the guy that ran it, his name was John Johnson. He was the president. He flew me all around these conferences for a couple of years, and I would talk about precious metals IRAs. This is almost 20 years ago. And so all the stuff was stored at Delaware Depository back then, and I didn't know this until I found out the hard way. A client of mine in Minnesota who owned a candy company, sold it, and he had bought, a couple thousand bars at, $300 a piece or whatever, when silver was really $300 to $400 a piece. He had millions of dollars worth, and he asked me. He said, "I sold my company. Can you meet me up in your vault in Fargo, and I'll take you out to lunch. I'm going to have the metal delivered to the vault, and I'm going to pick it up in a U-Haul." Sure, I said. And I drove up there from Minneapolis, 3.5 hours. And those bars at the time, back then, Johnson Matthey and Engelhard were the only really two name brand bars back then.
Mm-hmm.
Now you have Royal Canadian Mint and PAMP and Valcambi. There's a lot of name brand, but back then it was Johnson Matthey and Engelhard. What I'm going with there is this. I sold the guy all Johnson Matthey bars and Engelhard, probably tons of them. And when we opened the boxes, when he got there and I met him up there, they were all Academy stackable bars. I'm like, wait a second, this isn't right. This isn't what you were. And I got on the phone and I called him. What the hell is this? These bars, at the time, silver was almost $40 a piece. The guy made a killing, but these bars were probably $150 less per bar than the Johnson Mattheys. And they're like, no, we don't, you just get $100 bars back. You don't get the ones you put. What? So the point of it is that if you're going to store it somewhere, you want it segregated in Adam Taggart's name or John Doe's name. You don't want it allocated to the pool where, you're going to get here your 100-ounce bars. No, I want the ones that I bought. Huge mistake. What I would say to people is if you're going to store in an IRA, you want bullion and you want it held segregated in your name. There's a half a dozen depositories that will do that. That is key. Very, very important. As far as storage is concerned,
hey, real quick before we leave the IRA topic, so you have to find an RIA that works with a custodian like you or some of these other companies you're talking about, and you do have to be careful, right? Meaning you want to keep it there at the custodian. If you take delivery of it, per se, say you show up in your U-Haul and you say, "Oh, I want my stuff," then that becomes a distribution, correct? So you've got to be careful about the federal laws around distributions from.
Well, it's a good point. First of all, when we talk custodian, a custodian in this case would be the IRA custodian. So the one that I have the best success with, and I get no kickbacks, nothing. I've worked with all the custodians, and I'm sorry if you're a custodian out there, but they typically all suck. They have huge turnover. It's a paper pushing job. They're just doing paperwork back and forth between you and the IRS, basically. The depository is the important one. And so the custodian that I have the best success with, and they don't suck, they've been very good for us, is New Direction Trust Company in Louisville, Colorado. And their website is the acronym for New Direction Trust Co. NDTCO.com. You roll over your existing IRA tax-free into an IRA that allows precious metals in New Direction. You notice I didn't call it a precious metals IRA because that's not right. It's an IRA that allows precious metals. You can buy NVIDIA 10-year treasuries and Apple stock in it at the same time. But there's only about a dozen custodians out there that will allow physical metals in it. And then you choose your depository. And the ones that I typically choose are IDS of Dallas, Dakota Depository in Fargo, IDS of Delaware. They segregate. That's important. But that is the key to the precious metals IRA, Adam. What you just mentioned is the ability to deliver. It's a taxable event.
Mm-hmm.
But if you believe enough in it to be in your IRA, the ability to take possession is pretty cool. It's like owning ExxonMobil stock and expecting barrels of oil to be delivered to your driveway as a distribution. Not going to happen. But with this, it is. You can say, I wanted a distribution or liquidation in kind. This is why having it segregated is also important. So you get back what you put into it.
Yeah.
And yeah, they'll deliver it to you as a taxable event. But you know what one of the hidden benefits in all of that is? Let's go back to the pandemic, where Silver Eagles are trading at a $12 premium over spot or higher. When you get delivery or when you take possession from the IRA, they're going to value it, if not very close to spot. And so you end up getting that premium, in essence, tax-free.
That's really interesting. Yeah.
Yes.
And obviously you can take your distributions without penalty if you're above a certain age, right? So
At 59 and a half is the line. Anything under, you pay 10% penalty. Anything over, you don't. And it's an in-kind distribution or liquidation. And that's the key to the whole IRA, in my opinion, is the ability to possess it if you desire.
Okay. All right. So glad we clarified that. Okay. Now on to storage.
Yeah, I work with Brinks. I didn't want it in the vaults where I keep my own inventory. I want the separation, if you will, between church and state. And we have Brinks facilities in Toronto, Montreal, Vancouver, Los Angeles, Miami, Dallas, Salt Lake City, and New York. We're the only ones in the country, to my knowledge, in Dallas and Miami. We have the only safe deposit box program that I know of in Montreal and Toronto and Vancouver. And we've been doing this now for almost 16 years with Brinks. Never seen an ounce misplaced, but I wanted to work with the preeminent name in the industry, and that to me is Brinks. Never had a problem even for a second with them, in over $350 million delivered to those vaults. To me, it's the place to be.
Okay. So I am a new client of Miles Franklin, and I say, you know what, I want to put some metals into storage. So first off, I can buy from you. I can say, hey, Andy, let me buy some silver and gold, put it in the storage for me, right? So there's that, right, where I don't get my hands dirty at all, right? I just send you some money and you take care of it all. Presumably, if I've already got metals, there's the ability to get those to Brinks as well. How is that? Do I drive it there, or will they come to my place and pick it up? How does that work?
They won't come to your home and pick it up. They would meet you if you had a massive amount. We would set it up. They only come to a commercial address, a bank, or a business. They won't. You'll never see a Brinks truck driving down a residential street ever.
Okay.
But they will.
But I could go to my bank and they could pick it up there.
Yes, or we help you get it sent back with Federal Express, and we send you air bills with specifics. But yes, a lot of companies won't do that. We will. It's all tested to make sure that what goes in is legitimate. And the answer is yes, we can help you get it to one of the facilities. But for example, if you lived in the Salt Lake area or the Dallas area, for those vaults, or Los Angeles, we can set up an appointment where you go, tell us exactly what is being delivered. You pull up to the loading dock. They're going to check it in and give you a certificate waiting for you right there, and off you go. So the answer is yes to that.
Okay. And let's say I do that, either whether I ship this, whether they pick it up at my bank, or whether I drive to the Brinks place itself. I put this in, it's got a serial number next to it. This bar goes into segregated storage in my name, right?
Yeah, you could take a drop of your wife's nail polish and put it on every 15th coin, and then when you come back 6 years later, it's still going to be there. Yes, and I would never work with anything but complete and total segregation. That's a precondition of the business model that we have with Brinks. So yeah, absolutely, what you put in will be returned to you, whether it be bars that have serial numbers or coins that don't. Go ahead and do that. Put a drop of nail polish on, go back 4 years later. It'll be the same coin that you get back. Okay, and it's audited every year to that degree as well.
And do I get a report of that audit that says, hey, Adam, breathe easy, we just checked, your stuff's all still there?
You do.
Okay. All right. So let's say it's a couple years from now, and I want some of that bullion, either because I want to use it for something, or let's just say I get worried about the world, and even though Brinks is great, I want this stuff real close to me at this point in time. How does that happen?
You go pick it up, or we ship it to you.
Okay. So I can literally pick up the phone, call you, and say, hey, ship it to this address. And if it's shipped, is it insured so that if the truck blows up or FedEx, quote unquote, loses it, I'm going to get compensated?
It is. Yep, it is 100%. Everything, any metal that's shipped through post or FedEx or whatnot, it's always insured, 100%.
Okay. All right, folks. So as you guys know on this channel, I've got the financial advisors that come on every week. And my advice to you is, unless you're a successful DIY investor, you should find a good financial advisor to be your financial quarterback. And then I point to the financial advisors and say, hey, these guys are here and they're available to talk to if you want to. I don't care if you work with them or not. I just want you to work with somebody who's at least as good as these guys. If you find somebody better, great. Same thing with Andy here, right? We're talking about a lot of different solutions here. Andy's doing a really good job of telling you what to look for in terms of the scams and what he sees to be the honest ways to do it. I think Andy is a great, honest broker. It's why I have him on this program. It's why Miles Franklin is the endorsed precious metal solution for Alpha Money. But hey, if you find somebody that can meet your need at a higher standard of quality than Miles Franklin, I think it's going to be a tough ask. But if you find it, great, work with them. But otherwise, give Andy and his team there a call. So, all right, Andy, as we wrap up here, we're at the end of the hour. Again, thank you. You always just leave it all on the playing field when you come on here. Last question for you is a personal one. Is I gave myself those silver eyes on X when silver hit $35 an ounce. A follower very kindly took that photo and gave me silver laser eyes. Building off the whole Bitcoin craze. What point would you recommend I take? At what price would you recommend I take those silver laser eyes off? Is it $96 an ounce silver? Like, at what point should I say, hey, look, they serve their purpose. I thought silver was going to have a great run. It did. I don't want to give folks the impression it might double from here again in the near future. Like, I know I'll kind of call this in the moment whenever it happens, but what does your gut tell you?
For me, I don't think of selling silver. I think of trading my silver to gold.
Yep.
The geologic ratio for 5,000 years was 16-1. It's now 7-1. It's depleting in nature. The U.S. government just classified it critical, put a floor of policy and national security underneath it. The historical ratio between those two for forever is 16-1, right? But because of the manipulation by those 8 banks, that was distorted to the point where the price ratio got all the way up to 125-1 a couple of years ago, the highest it's ever been, ever. And now you come back here. I guess what I'm getting at is this. When I look back over my almost 36-year career, Adam, what has distinguished or stuck out the most, a handful of trades that have defined my career, as far as I'm concerned, have always been by identifying and exploiting anomalies in price. Mm-hmm. This is an anomaly in price geologically and historically at where we are right now. If the likelihood of it getting back to 45-ish to 1 is tremendous. That's the 100-year average, in essence, between that. Call that man's ratio. God's ratio was still 16-1, or the geologic ratio. Now that geologic ratio is 7-1, and man's ratio is still 88 or 80-1 or whatever it is today. It's actually real quick. It's 4210 divided by, call it 59. Let's just say 4210 divided by. You're at 71. It's coming down. It's falling. I didn't realize it.
Yeah, because it was above 100. Yeah, but it's still not at 45-1.
No, but 70, this is as low as it's been in a while. I think if you look, in 2010, the first interview on YouTube I did was with Bix Weir, and we were talking Bix, it's at 85-1. It's the second time in human history. We got to tell people to switch their gold into silver right now. And whoever did it would have got, in theory, 85 ounces of silver for 1 ounce of gold. Remember, the average is roughly 42 to 45 for the last 100 years. Within 7 months in mid-2011, you had $50 silver and a 1915 gold. That's 37-1. It got just below that. In 7 months, you could have traded 1 ounce gold for 85 ounces of silver. 7 months later, you would only need 37 ounces to trade back. And that's a double plus. I think you'll see that happen, where instead of trading your gold at 85-1, you trade it at its average of 45-1 or 42-1. It's double what you could otherwise get today. And that's just being the average price of the last 100 years. when it's coming out of the ground at 7-1. My advice would be when it gets anywhere near 40-ish to 1 in the 40s, you consider trading it to gold. Long before I would consider trading, go back into fiat.
Right.
My first consideration would be trading it into gold. But any asset class has its run, has its cycle, and I think we're far from this cycle being to the top. But one idea is to take those assets and swing into something undervalued. Maybe it's blue chip stocks at that point, trading at single-digit price to earnings ratio, or that cabin you wanted on the lake forever, selling it a fraction, or whatever it is. I think you'll know. But to me, the first thing I see in my mind's eye is trading it into gold, because when the music stops, I think the place to be is gold. But silver represents an opportunity of a generation, and I mean that honest to God. I think there are very few things that are as asymmetrically appealing as silver is right now. With the ability to switch it into gold and get close to double what you started with, I don't think there's a better place to be right now. But when the music stops, find a seat that's gold.
Okay. All right. Great. That's fantastic. And real quick, if I go back to my analogy of me having, which I do, have metals on storage with you. Let's say it gets down to 45-1, and I say, okay, look, silver's had the big run that it was going to have. Andy, can you take my ounces of silver in there and now convert them to gold for me? You can do all that for me?
Just like that. Yep. And it doesn't have to leave. We'll take it right there. We'll make the switch, put the gold back in, and you're good to go.
All right. Well, look, Andy, this has been awesome again. We're a little bit over the hour, so thank you for going long.
Yeah, of course.
You always do. I'm going to put this up. We've got, as folks know, Miles Franklin is the endorsed precious metal solution for the Thoughtful Money audience. If you want to talk to Andy and his team there, and Andy has very kindly committed to giving true white glove service to the Thoughtful Money audience. He will get on the phone with you himself, or make sure one of his lieutenants does, to answer all your questions, handle all your needs. If you want to talk to them, totally free. Just go to thoughtfulmoney.com/buygold, fill out the extremely short form there. It'll probably take you 10 seconds. And then you'll get in the system, and then Andy and or his team will be reaching right out to you right after that. And again, Andy, I just got to say, I always give you a lot of props when we talk about the service you've been offering to this audience, but at this sort of heightened time where there's been a lot of interest, but also emotion, around the precious metals, and a lot of people really determining, maybe I haven't been in this. Is it too late to get in? What form factor should I own? All this type of stuff. I've heard virtually nothing but just positive praise from the folks that have interacted with you. It just underscores again what a high integrity firm you've built, and what a high integrity guy you personally are.
Well, you have no idea how much I appreciate that. And the honor is mine, as I've always said. There are very few people in this industry who I think have the reputation that you do for what you do. So it's truly an honor, and we will always strive at the highest level to make sure your people are taken care of exceptionally. So thank you for the kind words, and I look forward to doing these. I think they're great, and happy to come back anytime.
All right, my friend. Well, look, I'm sure folks are going to ask that be sooner rather than later. So I'll be reaching out to schedule our next one of these. But again, it's certainly fun to do this when the precious metals are running like this. It's fun to be an official silver breakout. And folks, as long as it runs, we'll have Andy coming back on here to make sense of it for us. But Andy, again, I can't thank you enough, my friend.
Stay well, everybody. Thank you, Adam. Take care.
All right. And everybody else, thanks so much for watching.